Welcome to Celebrity Investing, your go-to source for insights, tips, and updates on navigating the exciting landscape of personal and global finance. Please like, share, and subscribe for more exclusive content. Is art a smart investment? How Masterworks and other options stack up. Art isn't just for galleries and museums anymore. It's becoming a serious investment. More people are turning to fine art as an alternative asset, drawn by its potential for high returns and diversification. Platforms like Masterworks have made it easier than ever to buy shares in multi-million-dollar pieces, opening the door to a market once reserved for the ultra-wealthy. But is art right for your portfolio? Let's break down how it stacks up against other investments. Why invest in art? Art isn't just beautiful, it can be a smart financial move. Unlike stocks or bonds, it offers unique advantages, from cultural value to returns that often outpace traditional investments. Let's explore why art belongs in your portfolio. Tangible asset with cultural value. Art is something you can see, touch, and even display, unlike stocks that exist as numbers on a screen. A painting or sculpture carries history, emotion, and identity, making it more than just an investment. While markets fluctuate, iconic works, like a Warhol or a Picasso, hold their worth because they're irreplaceable. Think of art as a legacy. It's not just about profit, it's about owning a piece of culture that stands the test of time. Low correlation with traditional markets. When stocks crash, art often stays steady, or even grows. The art market moves differently than Wall Street, making it a solid hedge against volatility. Art prices depend on scarcity, demand, and prestige, not quarterly earnings reports. During economic downturns, high-value art has historically held its value better than equities. This independence from traditional markets makes art a buffer, smoothing out the ups and downs in your portfolio. Potential for high returns. Some artworks have skyrocketed in value, far outpacing the S&P 500. A few standout examples. Jean-Michel Basquiat's Untitled sold for $110 million in 2017, up from $19,000 in 1984. Andy Warhol's Shot Sage Blue Marilyn fetched $195 million in 2020, nearly 100,000 times its original 1964 price. Of course, not every piece becomes a masterpiece, but when it does, the returns can be staggering. The key is knowing what and when to buy. How to invest in art. Art investing might seem like a world for millionaires, but there are more ways to get involved today than ever before. Whether you buy directly from an artist, use a fractional ownership platform, or join an art fund, each method has its own pros and cons. Here's how to start putting art in your portfolio. Direct purchase from artists or galleries. Buying art directly gives you full ownership, no middlemen. But it also means handling everything yourself, from authentication to insurance. Finding the right piece. Start by visiting galleries, auctions, or artist studios. Emerging artists often offer lower prices with potential for future growth. Authentication and provenance. Verify the artwork's history. A certificate of authenticity and clear ownership records protect you from fakes and disputes. Condition and appraisal. Have the piece inspected by an expert. A professional appraisal helps with insurance and resale value. This method works if you love the art itself, not just its investment potential. You'll need patience, research, and sometimes connections to get the best deals. Art investment platforms. Fractional ownership platforms let you buy shares in high-value art without needing millions upfront. How it works. Platforms like Masterworks purchase blue-chip artworks, then sell shares to investors. You own a piece of the painting, not the whole thing. Lower barrier to entry. You can start with a few $100s instead of a few million. Liquidity. Some platforms offer secondary markets, letting you sell shares before the artwork itself is resold. The downside? Fees. and returns depend on the platform's ability to sell the piece later at a profit. Still, it's the easiest way to invest in top-tier art without deep pockets. Art funds and syndicates. These are pooled investments where professionals buy and manage art collections for a group of investors. Structure. Investors contribute capital, and the fund's managers acquire art with the goal of selling later at a profit. Fees. Expect management fees plus a cut of profits. Diversification. Funds often hold multiple artworks, spreading risk across different artists and styles. The catch? Lockup periods. You might not see returns for years, but if you don't want the hassle of choosing art yourself, a fund handles the legwork for you. Each option has its own balance of control, cost, and convenience. Pick the one that fits your budget and how hands-on you want to be. Risks of art investment. Art may dazzle as an investment, but it's not all auction records and skyrocketing prices. Like any asset class, it comes with risks, some obvious, others hidden. Before jumping in, it's smart to know where the pitfalls lie. Illiquidity and holding periods. Art isn't a stock you can sell with a few clicks. Finding a buyer for a major piece can take months or years, especially if the market cools. No guaranteed exit. Unlike publicly traded assets, there's no daily market for art. If you need cash fast, you might sell at a discount. Long-term game. Top auction houses often prefer works held for years. Flipping art quickly rarely maximizes returns. Costs pile up. Storage, insurance, and restoration eat into profits while you wait for the right buyer. Patience is non-negotiable. Art rewards those who can afford to wait. That's all for part 1. Now you've got a better idea of why art could be a valuable investment. Stay tuned for part 2, where we'll compare masterworks with other investment options. Stay tuned and continue to watch our videos to gain valuable insights into the world of finance. Subscribe, like, and share to continue your journey to financial success.